Learning Objective 3, identifying areas that should be included in a comprehensive financial plan. In 2003, CFP Board set forth some major planning areas that were utilized on their exam. Well, the exam changes over time, but the major planning areas remain, and it gives us a pretty good grasp of the important elements of comprehensive financial planning. And when we visit with a client in that very first stage to establish the client relationship, we need to be cognizant of these core areas when we establish the relationship. Because generally speaking, as we work with anyone midlife and on, we're going to have needs in all of these areas. A shortcut to remembering them is G, retire. G, retire. We have general principles of financial planning, the G in G, retire, and that's a lot of this course that you're taking. We cover your basics from cash flow management, building a credit report. We talk about balance sheets. We talk about statements of cash flow. We get into bankruptcy. We really hit on time value of money. We talk about ways of solving. We have some discussion of software tools, the general principles of planning. Well, there's two R's in G, retire, and the first is normally risk management and insurance. Property, casualty, life, health, annuity, insurance products is all covered under the umbrella of risk management. We have two E's. The first E is generally considered employee benefit planning. Employee benefits would be your group health at work, your different sort of PTO days, EAP plans, what type of retirement plan is the best fit for a small business, and other types of employee benefits that we may administer through a small company or through employees themselves. T for tax, income tax planning. In financial planning, we have income tax, we also have gift tax, estate tax, sales tax, property tax, revenue tax. And based on what your client is, it's very important that we have a great knowledge of the tax code. And our tax code really, it kind of overlaps all the other areas too. We have to have an understanding of pre-tax and post-tax when it comes to our next topic of investment planning. Tax and investment planning are heavily linked, but investment planning we get into what asset allocation should I pick? Should it be stocks? Should it be bonds? Why should it be stocks? Why should it be bonds? What type of stocks? What type of bonds? How much cash? Alternative investments, commodities, measuring return dynamics for a client, when to use geometric mean, when to use arithmetic mean. And that sort of thing falls under investment planning. Retirement planning, we can look at personal retirement planning. We can look at corporate, small business retirement planning as well. Retirement planning, retirement income planning is the focus of why consumers plan today. And estate planning is last in G, retire. Wills, trusts, important documents that we need, looking at the aggregate estate and making sure that my intent while I'm alive is reflected when I'm gone. So G, retire are the major planning areas of CFP Board, and they're good planning areas that we use today.